Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to have the opportunity to attract such a distinguished audience. If you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry at gmail.com. Telegram Vietnamstockmarket.entry with the phone number is 8491-432-6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name, Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyen. She is a personal financial advisor and a Viet Capital Securities stockbroker manager. You can contact her with the email hồng.nguyen@vcsc.com.vn with the phone number is +8491-432-6556. We always welcome you to our office on the 11th floor, 119 Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about MSN. Masan Group specializes in consumer businesses that span FMCG, retailing, and the mid-value chain. New initiatives are aimed toward a consumer tech ecosystem with telecom and fintech products. Other businesses include metal-based materials and an associate stake in Techcombank. And this is the report which was collected by Viet Capital Securities about MSN Masan Group on the 8th December 2022, where the current price is 100,000 Vietnam dong. Target price 119,000 Vietnam dong. Last target price 139,000 Vietnam dong. Economic slowdown curve 2023 outlook. We lower our target price for MSN by 14% to 119,000 Vietnam dong, but reiterate our buy rating. Our lower target price is primarily driven by our 1. Lower in-house valuation for Techcombank, driven by an 11% aggregate decrease in our in-house projected for 2022 to 2026 forwards net profits after tax MI. 2. Lower valuation for Masan Consumer Holdings that is derived from our 17% lower projected aggregate EBIT for MCH in 2023 to 2025 forwards. And 3. 26% lower projected aggregated EBIT for WinCommerce in 2023 to 2025 forwards. And 4. Raising our WACC assumption as a result of our higher equity risk premium. We remain bullish on the outlook for MSN's leading and wide-ranging consumer businesses to benefit from Vietnam's long-term consumption growth. That said, we expect weak consumer consumption to overhang MSN's consumer retail business throughout 2023. We assume more vibrant consumer spending in H2 2024 and a full recovery starting from 2025. We also expect global economic slowdown to undermine Masan high-tech material sales. In addition, we expect higher financial expenses due to interest rates. Potential upside catalysts sooner than expected recovery in the global economy and Vietnamese consumer confidence. Successful scale-up of technology applications backed by trusting social. Further ownership reductions in MHT value creating M&A. The risks to our positive view, weaker than expected global economy and Vietnamese consumer confidence, ineffective store expansion at Win Commerce and Footlong Heritage. Weak consumer confidence to dampen growth at MCH in 2023. We believe most consumers this dispose disposable income has been hit by one, inflationary pressure in H1 2022, and two, the recent deterioration in certain export businesses leading to reduced working hours and layoffs. Against that backdrop, we cut our aggregate 2023-2024 forward revenue forecast for MCH by 10%, which is mainly derived from our 17% downward revision in 2023-2024 aggregate sales of MCH key reasonings category. Nevertheless, we expect convenient foods to grow at 12% in 2023 and 50% in 2024, which is driven by our expectation for strong growth from low-end brand Kokomi MCH key brand. We are more optimistic about MCH emerging categories, energy drinks, beer, and processed meats, which we expect to deliver 15 to 25% growth in each of 2023 forwards and 2024 forwards. Gross margin improvements and continuing but more conservative store expansion to drive WCM's performance in 2023-2024, offset by a lower contribution from PL. We expect MSN will add 500, 600 new Winmart Plus stores in 2023-2024 respectively, compared to our previous assumption of 1,000 new Winmart Plus stores. Following WCM's resilient gross margin improvement in 9 months 2022, we believe Chin PM could expand by an additional 150 basis points in each of 2023 and 2024 in accordance with Winmart Plus larger scale. Nevertheless, these factors are substantially offset by our 45% downward revision in PL's aggregate 2023 to 2025 forward EBRT. Now we move to the 9 months 2022 WCM profitability rises, MCH sales momentum improves. MCH BCSC comments, mainly driven by processed meats. Meanwhile, revenue from seasonings and convenience foods declined 2.6% year-over-year and 6% year-over-year in 9 months 2022 respectively, due to one, weak sales in Q2 2022 as a result of dampened consumer spending power, and two, the high base of Q3 2021 due to stock peeling during nationwide COVID-19 lockdowns. Sales momentum got back on track in Q3 2022 as seasonings and convenient foods grew 34% Q-off-Q and 46% Q-off-Q respectively. WCM LFL revenue of Winmart Plus declined 19.4% year-off-year, and Winmart's revenue fell 6.4% year-off-year. We partly attribute the decline for Winmart Plus to the high base in May to October 2021 due to a surge in demand from consumers stocking up on goods because of social distancing measures. The respective store counts of Winmart and Winmart Plus were 128 and 3,049 as of Q3 2022, compares to 122 and 2,619 at year-end 2021. PL MSN required a controlling stake in Footlong in January 2022. MML, mainly judged by the drop in pig farm revenue that was primarily due to lower pork prices. MHT, driven by rising commodity prices and strong demand for tungsten. MCH EBITDA margins declined 180 basis points year-over-year to 22.7%, but gross margin declined by only 130 basis points. Meanwhile, SG&A revenue dropped 80 basis points. WCM's EBITDA margin improved to 3.3% in Q3 2022 from 2.2% in H1 2022, which was backed by the improved performance of new stores, further improvements in total commercial margins, and gross margin resulting from negotiations with suppliers and cost optimization and a more effective product assortment and targeted promotions. Footlong, due to the performance of flagship stores and the review of closure of kiosks, EBITDA margin improved to 25.4% in Q3 2022 from 14.3% in H1 2022. MML on an LFL basis, EBITDA margin was less than 1% in 9 months 2022, compares to 6.6% in 9 months 2021, due to lower pork prices resulting from higher animal feed prices. EBITDA margin turned positive to 1.2% in Q3 2022, compares to less than 2.5% in H1 2022, thanks to improved margins of the farm and chicken businesses. TCB's contribution. Please see our earnings flash. TCB corporate bond balance continues to decline late October 2022 for more details. Others, overhead expenses at the whole core level and other items. And next, that is the 2022 forward modest outlook for consumer businesses and HT to shine. MCH, we cut our sales forecast for most categories, notably seasonings and convenient foods by high single digits rates, as these categories tracked behind our previous expectations, with the exception of beverage and processed meat. We still expect MCH revenue to be driven by energy drinks more than 25% year-over-year and processed meat 55% year-over-year. WCM, we further decreased our forecast for SSSG of Winmart Plus by mid-teen rate to less than 20%. Meanwhile, we edged off our forecasted number of new stores for Winmart Plus to 700 stores, compared to 680 previously. We expect that Winmart store counts will be 3,319 per 127 by year-end 2022 from 2,619 per 122 as of year-end 2021. Footlong. We expect Footlong will add 40 full concept stores, compared to 70 in our previous forecast, and 150 kiosks located inside Winmart Plus, compares to our previous forecast of 400. MSN has closed 220 kiosk stores from June to September 2022. MML, no more contributions from the fifth business. Sales dropped 3% year-over-year on an LFL basis. Our lower forecasted sales are due to our downward revision of WCM revenue as 60% of MML's mid revenue is through WCM's store network. MHT, our lower forecasted sales are mainly due to our cuts in sales volume of tungsten and fluorspar by 20% to 30%. Intercompany adjustments and others. Elimination of intercompany transactions between MCH per MML and WCM. WCM, we expect continued improvement in profitability of new stores as 76% of Winmart store open in Q3 2022 achieve positive store level EBITDA in their first few months of operations compared to 82% for all Winmart Plus stores, which is partly offset by our continued downward revision in Footlong's EBIT. We maintain our GPM projection for WCM, which inches up 3.3% year-over-year to 23.3% in 2022. Footlong, due to our decrease in GPM assumption as we believe the kiosk format has lower PL's gross margin, while flagship stores have proved highly profitable. MML, lower forecasted EBIT is due to lower forecasted sales, while we maintain our EBIT margin projection for MML. MHT, lower forecasted EBIT is due to 1. Lower forecasted sales and 2. High degree of operating leverage. Associate profits, shared profits primarily from TCB. Interest expenses due to higher debt balance and interest rate. Other non-operating items net. We lower forecast interest income from deposits and loan investing activities to 679 million Vietnam dong, $27 million from 906 million Vietnam dong to 37 million previously, as 9 months 2022 tracked behind our expectations. And next, that is the 2023 forward WCM to derive EBIT expansion, higher interest expansion to dampen earnings. MCH, we expect mid-single-digit growth for key seasonings category as we expect more consumer down trading to impact this segment amid economic slowdown. Nevertheless, we still expect convenient foods to grow by low teen rates, which is mainly driven by our expected strong growth of low-end brand coconut and partly offset by slower growth of premium products, which accounted for 44% of convenient food sales in 9 months 2022. We are more optimistic about MSN's emerging categories, energy drinks, beer, and processed meats, and we forecast 15 to 25% growth in 2023, following high double-digit growth in 2022. WCN, driven by our projected mid-single-digit SSSG at Winmart Plus and Winmart, a full-year contribution from projected 700 stores opened in 2022 and expected 500 new Winmart Plus stores. We project that Winmart Plus and Winmart store count will be 3,819 and 132 by year-end 2023 from 3,319 and 127 as of end 2022. Footlong, driven by one high single-digit SSSG at both flagship stores and kiosk formats, and 2 are expected 50 new flagship stores and no expansion in kiosk format. MML, driven by 15% growth of meat delis pork sales thanks to widening distribution, which contribute 2.7 trillion Vietnam dong, $110 million and 14% growth in 3F Viet Chicken sales contribution, 2.3 trillion Vietnam dong, $95 million. MHT, mainly owing to a low single-digit growth in volume, while we expect a decline by 11% and 9% in realized selling prices for tungsten and fluorspar, respectively. Intercompany adjustments and others. Elimination of intercompany transactions between MCH and MML and WCM. We expect WCM EBIT margin to improve from less than 1.7% in 2022 to 0.7% in 2023, primarily backed by 150 basis point improvement in gross margin and accelerated sales per store from 700 new stores opened in 2022. WCM, we expect WCM's EBIT margin to improve from less than 1.7% in 2022 to 0.7% in 2023, primarily backed by 150 basis point improvement in gross margin and accelerated sales per store from 700 new stores opened in 2022. Footlong, we expect EBIT margin to improve by 110 basis points, primarily backed by a full year benefits from the closure of underperforming kiosk stores in 2022. MHT, due to a high degree of operating leverage, a large portion of impact from selling price decrease will flow straight to the bottom line. Associate profit share profits primarily from TCV interest expenses. We expect a higher interest rate environment to increase MS and financial expenses. MCH, we expect MCH sales growth in 2023 to 2024 to be driven by emerging categories, partly offset by modest growth of seasonings. In H1 2022, Vietnam experienced some of the highest rates of inflation in 2 years across FMCG categories, resulting from shoppers trading down to their product choices. Per Nielsen, IQ Vietnam's FMCG consumption value experienced mid-single-digit year-over-year growth in H1 2022 that was mostly driven by an increase in unit value growth while volume remained stagnant. That said, 9 months 2022 volume growth approached 10% compared to a 5% drop in 9 months 2021, which we believe signal a mid-recovery. However, we started to see most consumers' income coming under pressure again owing to recent headwinds for exporters and turbulent financial markets. For instance, recent deterioration among exporters has led to workers suffering reduced working hours or even unemployment. Against this backdrop, we cut our aggregate 2023 to 2024 forward revenue forecast for MCH by 10%, which is mainly derived from our downward revision in 2023 to 2024 forward aggregate sales of the key seasonings category by 15%. Nevertheless, we expect convenient foods to grow 12% in 2023 and 15% in 2024, which is mainly driven by our expectation strong growth of low-end brand Kokomi, MCH Keys brand, and partly offset by slower growth of premium products, which account for 44% of convenience food sales in 9 months 2022. We are more optimistic about MCH's emerging categories, energy drinks, beer, and processed meats that we anticipate delivering 15 to 25% growth in 2023 to 2024. We expect MCH to deliver a 16% revenue CAGR and 17% NPIT MI CAGR in 2023 to 2025 forwards. MCH gross margin has remained around 40% in 9 months 2022, supported by its wide-ranging and diversified product portfolio, and we forecast GPM of 40.5% in 2023 forwards and 2024 forwards. WCM 2023 to 2024 performance will be driven by store expansion and gross margin improvements, offset by lower Winmarketplace SSSG and forecast contribution from Phúc Long. WCM has 20% of revenue shared from PL, We forecast MSM will add 500 and 600 new Winmart store in 2023 and 2024 respectively, compared to our previous assumption of 1,000 new Winmart. We also revise our SSSG assumption of Winmart to 6% in 2023 to an 8% in 2024, compares to 7% per annum in our previous forecast. Following WCM resilient gross margin improvement in 9 months 2022, we believe GPM could expand by an additional 150 basis points in each of 2023, 2024 due to 1. Higher bargaining power thanks to a larger store network. 2. Lower wastage due to a more effective product assortment. And 3. Increased sales from private labels. We expect WCM's EBIT margin to improve from less than 1.7% in 2022 to 0.7% in 2023 and 3.8% in 2024, which is primarily improvement in gross margin in 2023, 2024, coupled with accelerated sales per store from 700 new stores opened in 2022 and 500 new stores opened in 2023. We cut our year-end 2022 footlong kiosks store count assumption to 750 from 1,000 previously amid MSN's effort to close underperforming stores. As such, we expect MSN will not open new kiosk stores in 2023. We also lower our projected for new flagship store opening in 2023 to 50 compared to 100 stores previously. We expect MSN to resume expanding both kiosks and flagship formats, each at a pace of 100 stores starting in 2024. We also lower our GPM assumption for PL by 4 PPTS and 3 PPTS to 63.2% and 64.5% in 2023, 2024 respectively, as we believe the kiosk format has a lower gross margin, while flagship stores have proved highly profitable. As a result, our aggregate 2023-2025 forward EBIT projection for footlong is 45% lower than our previous forecast. We expect MHT's sales to experience headwinds in 2023 owing to global economic slowdown. MHT's sales were 99% driven by foreign markets in 2021, with China, the US, and Germany accounting for 23%, 20%, and 17% respectively. As such, we reduced our aggregate 2023 and 2024 forward revenue forecast for MHT by 7% and hence reduce our 2023 and 2024 forward EBIT projection by 37% compared to our previous expectation due to the business high operating leverage. And now let's take a look over the valuation. We maintain our sum of the parts valuation approach for MSN. In this update report, we raised our ERP, and therefore our cost of equity assumption by 100 basis points. We also roll over our target price horizon to end 2023. Our lower target price is primarily driven by our 30% cut in our house valuation of TCB due to one 11% aggregate decrease in our in-house projection for 2022. The 2026 forwards net profits after tax amount to an increase in our in-house assumption for TCB's cost of equity from 13% to 15.3%, and 3, decrease in our target PB multiple from 1.8 times to 1.2 times. Please refer to our banking sector updates dated the 7th December 2022. Other factors that reduce our target price include 1, our lower valuation for MCH due to our 17% lower projected aggregated EBIT for MCH in 2023 to 2025 forwards, and 2, our 26% lower projected aggregate EBIT for WCM in 2023 and 2025 forwards, and 3, raising our WACC assumption as a result of our higher ERP. Tier 4 VCSC sum of the parts valuation for MSN. Total equity value is 375. With the target price is 119,000 Vietnam dong. Recommendation history with the actual price and target price. Financial statements. And that brings me to the end of my presentation about Masan Group, MSN. Hope this video will be useful for you. And if you want to open a legal training account, please contact us with the information on the screen so that we can support you. Don't hesitate to contact with us. So thank you for your listening and see you next time.